Hey everybody, welcome to this week's Ag Commodity Corner Plus podcast. It's week 54, and today is the 17th of April, 2026. Mo, what are we talking about?
We're talking about the big news. Strait of Hormuz is finally reopened temporarily.
Finally.
Crude's fallen, as much as 10 to 12%, and stocks are soaring. So let's get into it. Here's the weekly quote summary chart, and I highlighted corn because if you remember last week, I highlighted beans, and I said beans were the win because we closed higher for the week, and we closed higher again for the week. This is the May contract, but still a win because the support in old crop corn, May futures is about 432. So I think the farmer selling may be abated, and the funds were defending some of those long positions. Kansas City wheat hit a new closing weekly contract high. That's important because you need that in order to get a technical breakout. Cotton just continues to soar, now up 23% since beginning of February, but farmers are still in the southern U.S. not able to make money, but it's getting closer and closer to that break even. I highlighted hogs because seasonally, this is not a surprise. It's a little weaker. I think summer futures got ahead of themselves, but cash and cutout are struggling. But that's not unusual for this time of the year. You're just going to have to give it some more time. And of course, because crude is plunging, maybe this Strait of Hormuz is open. We'll see. I don't know if we're out of the woods yet, but a lot of the headlines coming out of Trump today sure looks like it is. And of course, the stock markets are soaring. The Dow is not at a new record, but both the S&P and NASDAQ are. And so let's get into it. Let's start off with this Strait of Hormuz.
Yep, the headlines there regarding the Strait of Hormuz and the war in the Middle East. This week has generally been positive in terms of the rhetoric regarding the war. So there's headline news that the Strait of Hormuz is reopening. And like you mentioned, unexpectedly, that has been impacting a lot of these markets. Crude oil prices tumbled by about 10% as Iran declares the Strait of Hormuz open again, which eases some of those crude oil and energy supply fears. Prices for crude had already begun to ease after Trump announced the ceasefire deal between Lebanon and Israel, which was the other sticky point. And the truce raises hopes for peace talks across the region. And WTI crude oil, the daily support for crude comes in at $82 on the daily chart. And for the stock market, and like you mentioned, S&P and NASDAQ are into new record highs. For the S&P, it's at record highs above 7,100. And looking at history on average, if you look at history since 1985, a year after hitting new record high stocks, the S&P 500 stocks have climbed by about 19.4% higher. And also a high in crude equal to less safe haven demand for the global reserve currency, which is the US dollar. And that means a bottom in the Canadian dollar.
So let me just go back here. Just wanted to touch on a few things. So crude oil, the support is that 82. We've talked about that in past podcasts. Weekly, this is bearish. We've talked about long-term how crude oil prices have to come back down. We'll see. There's a lot in the world that are talking about how it could take years, in some cases months, even months just to do a peace deal. I disagree. I don't think it's going to take that long. Again, the stock market, I think this little blip here long-term will look like a small earthquake in the long-term scheme of charts and stock markets over long periods of time. So again, another one of those buying opportunities, just like this was a buying opportunity as well when we had those that Liberation Day last April. So not quite as steep, but nonetheless, it was a particularly in tech, it was a good buying opportunity. And the U.S. dollar has been range bound for the last year. So has the Canadian dollar. So I'm not sure we're going to break out of this range. But what this all allows us to do is go back, because stocks really peaked last October, November. kind of lost about 5 months worth of performance. Now we can get back to some performance, and we can go back to talking about interest rates, maybe getting a chance to start to lower those interest rates. Kevin Warsh in the U.S., the new Fed chairman, possibly did pass a little hurdle here short term. And so, we're starting to see headlines that say that Kevin Warsh will start to lower rates because that's what Trump wants to do. So that could happen in June, and that would only accelerate the push higher in stocks. What about this Farm Bureau fertilizer survey, Abhinesh?
Well, despite all that good news, which is great, but there would be some lingering impact of the war, and one of that is on fertilizer. So a farm futures fertilizer survey at the start of April, including about 5,700 farmers, showed that 70% of US farmers can't afford all fertilizers needed, with small farmers being more vulnerable, considering their lack of past pre-booking rates. Urea US Gulf futures finally coming down, but is it too little, too late?
So just to get back to this Farm Bureau survey, this is probably one of the worst surveys we've seen yet, where it's showing that the Midwest farmer did not book a lot of their fertilizer forward. You can see it's the fringe states and the southern states that probably did worse versus the U.S. Midwest. You can see from this chart, if you look at corn, Midwest 72%. My concern is that I think the common theme amongst all of these regions is that the farmer took a risk. They did not book forward because they thought the price was coming down, and it went the wrong way on them. And we were telling our members that a tight global balance sheet was not going to send prices lower anytime soon. Don't take the risk. Don't wait till spring planting. Make sure you get it booked. And so all our members were 100% booked, and we avoided this little issue we're having here. So I still think long term we're going to lose some acres from the USDA June acreage report. And it's one reason why I think corn prices need to pop here over the next quarter. And this is your urea. Now, this chart doesn't show because crude fell about 10+% today, it didn't quite show up in this chart. It should show up in Monday's report. But if you go further out into the deferreds, urea US Gulf FOB is trading at closer to 580. So I wouldn't be surprised if in Monday's trading, we could see this 720 and a quarter, which was the high. So it looks like if this war has come to an end, we're not going to retest the highs of 2022 at 880. Now, don't forget to try our program. Join the club. We got the app. We got our monthly USDA webinars. This week, we're talking about 2026 July corn futures. Has it peaked? You've seen that correction. We were telling our members what to do. So again, if you're looking for a unique commodity research boutique, that's what we are, that can manage every risk on your farm, you found it. So try the program. I guarantee you're not going to be disappointed. What about these wheat conditions, Abhinesh?
So as we get more and more of the weekly USDA updates regarding crop progress in the U.S., USDA showed that as far as winter wheat is concerned, in the top 5 states for HRW wheat, which includes Texas, Kansas, Colorado, and Oklahoma, 45% of HRW is 45% is in poor to very poor. And there's no meaningful rainfall in the 10 to 14 day forecast into the end of April. Temps in the month of April have been historically record high, with severe soil moisture deficits in the southeast and western U.S. plains. The chance of one last frost risk remains into the end of the month. Historically, it can happen around the April 30th to May 1st region. The latest seasonal drought monitor map that we received today, or rather this week, from NOAA shows that drought lingering and expanding into the end of July in the southeast and western U.S. plains. US planting delays usually are not market moving, but 2019 did see corn futures rally by about 35%. It's rare. What do you think, Mo? My concern is that it gets cool again by the end of the month, and the warm up could delay planting into the second week of May.
I totally agree. So the last two planting delays were 2013 and 2019. 19 was worse, and corn futures actually rallied 35%. You can see this in this chart here. So again, I'm concerned because not only does it get cool at the end of April, but it gets cool again this weekend going into Monday, Tuesday. And we've been talking about, let me just go back to these charts, but we've been talking about hard red winter wheat regions. And these conditions are going to get worse again. Now, will this frost or freeze into Monday, Tuesday impact these conditions again? I think you're going to bruise that in the high plains, bruise that winter wheat crop again. And I mean, how many lives are we going to destroy here? So I think these conditions come down. I just told you that for the week, Kansas City wheat futures closed on a new weekly contract high. If we can close above the March high at that 662 and a quarter, this is July Kansas City wheat futures, we're off to the races. By the way, the month of March, now this is April, and you can see the severity in the soil moisture deficit, but the month of March for 2026 is one of the driest since 1893. The only other 2 months that were worse was the Dust Bowl of the 1930s in 1934, both July and August. And I know a lot of meteorologists are talking about the super El Nino, and they're talking about how that's going to save the crop, and we don't really have any worries. But these areas here, these areas here are a problem. And I know that the U.S. Midwest is getting a ton of moisture, but we're not out of the woods yet. So we'll have to wait and see how the month of May plays out. This is the frost. So not only are you getting a frost freeze on Monday, Tuesday of this coming week, but then you're getting it again at the end of April. It's so wet in the Midwest, you're not going to get enough warm temperatures to warm up that soil. Now you got to wait another week, and I know that farmers can get the crop in faster than in 2013, faster than in 2019. They can probably get it in a week or less. But will Mother Nature give you that opportunity? I don't know. You start to get into that May, that second week of May. Does it pose a problem? Does it get the guys, the funds excited? I think it does. Because there's other... you're starting to get into that mid-May Trump Z meeting. All of a sudden, maybe we get some more corn buying from China. So I think the funds are going to have to start adding a risk premium back to corn futures.
Let's talk about Bitcoin. Does anyone remember Bitcoin? It's been a bit of a forgotten asset for quite a while. Despite the war in the Middle East, Bitcoin has been holding its 200-day moving average. And as you guys can see towards the end there, putting together that recovery.
Yeah, so, he's talking about this little bounce off that 200. You can see if you go back to history, the 200 has acted as support. So I think the markets were quite surprised that maybe Bitcoin didn't perform poorly during the war, but it was range bound, and now it looks like if we can get past this war, that the old ceiling at support at 80,000, 81,000 looks like the new ceiling. So if we can break back above that, you can see here that we did have a sort of a triple head and shoulders top formation, but maybe the worst is behind us in Bitcoin.
Let's talk about canola. April 6, canola crush margins hit a record high over $350 per metric ton compared to under $60 per metric ton at the end of last May. That exceeded the previous record of just over $300 set during the price spike that accompanied the Russian invasion of Ukraine. Prior to COVID or 2021, canola crush margins spent most of the time in a range of $50 to $125. It will continue to inspire record domestic uses. As of April the 6th, the domestic usage is expected to be 8.338 million metric tons compared to 7.908 last year, according to CGC's Grain Statistics Weekly Report.
So canola, this is the July futures contract, has been tied to soy oil hips and crude oil hips. So if crude has peaked, we've mentioned this, soy oil has peaked short term. All of this, soy oil is probably priced in all of that demand optimism for biofuel, which will weigh on canola. But we've also talked about how in the last few podcasts that the grain markets are divorcing themselves away from crude. We're going to need to take the fundamentals and the weather to play a bigger role. I think they are starting to do that. Why? Because soybeans actually bounced off 16 cents off their lows. Corn bounced 4 to 5. So did wheat. To me, that is the funds defending their long positions, despite that knee-jerk reaction initially this morning, and that's positive for the week. So the 700 comes in as your support, or 683 with the 200-day moving average. But I think these strong domestic use fundamentals, crush margins, including crush margins in beans, which are not quite at a record, but it's at $3 a bushel. The old record's $3.10 a bushel. That's going to continue to drive prices higher longer term. We still got to, unfortunately, feed the bull. But next time you go sell canola bushels or soybean bushels to your local crusher, understand that they have a lot of margin they can give away. And so don't be afraid to ask for more.
And we had the April monthly USDA cattle on feed report released today, which was generally friendly to bullish. The cattle on feed inventory numbers, 99% of last year, lower than expected. Placements and marketings came in close to expectations.
Yeah, this does nothing to futures. I think the market was more concerned about reopening the border to Mexico and feeder cattle, which, I don't know. We'll see if it does happen or not. But remember, if Mexico was, when the border was open, was sending us 3 to 4% of the total U.S. beef supply. So at the end of the day, it's not the end of the world. I still think it's noise.
We also had the weekly CFTC update today, and as you guys can see, some selling in corn and soybeans. So in corn, there was net week-on-week selling of about almost 60,000 contracts, taking that net long position to about 160,000 contracts. On the soybean side, we sold about 14,479, taking that net length to 175,151. On wheat, again, some selling in Chicago and Minneapolis. In Kansas, we saw more buying. On the canola side, again, selling of about 25,000 contracts, taking net length to 72,829.
In real time, I think the market, the funds were buying the wheat back this week because of the rally. And I think they're going to continue to add to those positions next week. If you look at our total grains and oilseed, including canola long positions in the funds, you can see that we approached 875,000 long contracts. The record was about 886,000 going back to 2021. We're down to about 735,000, 736,000 and change. But in real time, I think we're back to this 800,000. Again, this CFTC report is a little bit delayed. So, and I wouldn't be surprised over the month of May that we do break out to new record highs. So I'm not worried about this little correction. It's not the start of the funds puking these long positions. It was just a correction, and I think we'll resume that into next week. Until next time, thanks for watching. Don't forget to subscribe to our channel. If you know a farmer or a friend that needs some help, tell them about this podcast. Appreciate it. Take care. Make it safe if you're planting that crop.
Bye, guys.